Good day. This is week number 11. Welcome to Green Bicep. Signal from the noise. All right, here we go. So, over the last week, we had some volatility. The banks were under distress, duress, you name it. They were having issues across the board. And as you can see, the market today rebounded quite a bit. Actually, all the regional banks were up like quite a bit. Some as high as 20%, well, some is just a few percent. But there was still pressure seen in the banks. There were a few stocks that were like, for example, Credit Suisse was recently downgraded. And because of that, they're under pressure. Plus, they have internal control issues. So the new normal, the war, friction, and who do you think will benefit the most in this situation? Well, I put the East. I think regionally, the loser is definitely the biggest loser is Ukraine, obviously, and Europe too, as well in general. And it's then because the strengthening of Iran, Turkey, Russia, and China and India, they've I think it's provided a foothold for stability for them and forced trust. But regardless, it's happening. So the markets had resumed their downtrend. My target now is 30.75. It dropped a bit from prior, and yeah, and margin contractions. There's a lot of reasons why that potentially could happen. Now, for this to play out, inflation has to remain sticky, meaning not go away. And because of the banks blown up, or not blown up, but under duress, because they were rescued, it makes this more challenging from an inflation standpoint. But I still think we're going to have inflation. So it just depends on the severity of the inflation and how long they're going to leave rates higher for longer. So if rates are left higher for longer, we could easily see 3,000 on the S&P 500. Crash. The odds have increased. And I said prior that we were going to likely have a moderate crash. We kind of did in banking. We had a moderate crash. Now I'm at the point where I think we're going to have a full market crash. And the thesis behind that is that confidence has been shattered. I mean, I haven't seen any sentiment polls as of late. But prior, we're near record low, not record lows, but lows over the last several years. But since then, so we were at lows, and then we started rebounding a little bit. Things seem more normal in society, and costs were dropping down. But then with this whole banking thing, everything's going to likely shift. And especially, I'm just expecting more news to come out this week or in the next, 7 days in regard to Ukraine and in the U.S. Treasuries and all that. It's an opportune time for the Chinese to dump our bonds and just to create more havoc. And we'll see what happens with that. It's an opportunity for them, and given the situation with the war and their support in Russia, it makes only sense for them to use that as leverage and say we want X, Y, Z. Otherwise, we're going to dump 100 billion in treasuries or something like that. And it may be a small amount, but it's sending a message. So the banks, Sweden has a lot of exposure to the banks. So unfortunately, they're feeling the pain. And so what happened in the last week, for if you're not aware, several banks, it started with a bank out of California, Silicon Valley Bank. And ultimately, they took people deposited money into the bank, and they took that money and they bought mortgage-backed securities, different types of investments, bonds related to mortgages or commercial real estate. And essentially that when that turned into a pet rock, because nobody wants to buy commercial real estate today. So they took the money and invested it into the stuff, but they can't sell it. So that essentially has constrained the banking industry, because word spread quite quickly about what was happening after Peter Thiel announced it and pulled his funds and basically created a bank run. Well, I won't get it too much into the politics of it because it's that bank supported quite a few entities. They're all over the world. I think there's definitely some oddities to it. It actually connects to eHarmony. It connects to TikTok, believe it or not, and it connects to the Chinese, and it's all connected to this one bank, Silicon Valley Bank. So they can no longer wash money because that was definitely going on, and that might have been the play why Peter Thiel crashed that bank. But unfortunately, there's a lot of other banks that have this exposure. The smart ones actually are hedged, so when rates go up, they're going to make money. Thus, they're protected, so they take that money, stash it aside, and then I come up to the bank, I say I want money, and then they could give it to me because they made money when interest rates went up. The other people, the other banks with CFOs that were greedy or not smart, they went and made that investment, right? They took your money, they bought some real estate bonds, say commercial real estate, and then rates shot up, but they didn't hedge. They didn't buy any interest rate protection, and all they could hand you now is a pet rock, unfortunately. So it's like one bank is smarter than the other bank, but everybody knows this was happening. I mean, Mexico was raising interest rates before the Federal Reserve was. So there's quite a few countries that were raising rates. So anyone that's making the salary, and most of these guys are in the millions or up there, they should understand this. So it's just ridiculous. Whether it's, I don't think it was planned. I think it was arrogance, and your neighbor does one thing, then you're like, oh, that's a good idea. Then you do the next guy across the street. I think it became a cultural thing. Like when people started buying back stocks, everybody else started buying back stocks, even when they shouldn't have, where their company's more under, it's not Apple. So essentially, the banks invested in pet rocks, and because of that, the bank couldn't do its job. And it was like George Bailey from It's a Wonderful Life. There was no money there, essentially, because they were invested in pet rocks, which is commercial real estate. So commercial real estate companies are likely candidates of being in trouble in the next 12 to 24 months as this plays out, because they have begun to miss payments, from what I've heard from credible sources. Yeah, so it's a slow thing, the way it's going to play out. So backing up, we have the banks, Sweden, and Wells Fargo actually was down a little bit today, and most of the other banks were up. So they're under a little distress, and they did a shelf offering. I believe that's so they have the capability to raise capital through issuing equity. And other banks that were off, like I said prior, was Credit Suisse. And I'm not going to go through the list. That's not the point of this. But yeah. So the Fed fund rate, I have it approaching 6% or higher. And the reason I have that in here still is my thesis way back in November, which makes sense, is that China's going to open. That's going to cause a little bit of inflation, yada, yada, yada. The fact now is China is open, but the demand is weaker than last year in a few areas. So saying that, inflation might not be as heavy. We'll see. I personally think the Chinese are purposely open up slowly just because it's smart to do that. They don't want to peak inflation or just go overboard in the beginning. So we'll see how March and April look, then May. Now, really, mid-year, we'll know how the Chinese are going to be going, like looking at their money supply and looking at the imports and exports. And that's really the problem here. The imports and exports in the Asian area, which are like Malaysia, Indonesia, Vietnam, those countries, their imports and exports are off, meaning they're not very good. And it's typically a lot of that is from China. So that implies China's not doing very good. So I just watch all these data points. I can't get into too much into the detail because of lack of time, but it seems to be working extremely well, just going over the surface and understanding like the flows of money and the flows of just energy in general in the region. And so it looks like China's like cooled off a little bit. But the fact is, inflation data did come out today, and it was hot, and and going up a little bit. And for services specific to rentals, and yeah, so housing's still tight in certain areas on rentals. And also, I saw new car sales, or actually, used car sales, where the price was up quite a bit year over year, and that makes sense because people are going from buying a new car prior they were, and now people are probably likely there's a mix shift going on from new to used, and so you get price swings like that. That's how it works. So that's likely what's happening. I couldn't find the new car data, but I'm sure that is likely the case. And so oil's been under pressure. Oil's complicated. But oil, I think, is a good long-term play. When I say long-term, I'm looking from the perspective of how Buffett invests. He has Occidental Petroleum. He still accumulates that, and so he goes long-term. And well, in that case, he ended up selling it and getting back in. But the point being is that this is a long-term play because oil's, with all this stuff going on, potentially oil could drop in price like it's been doing. And the technicals on oil have been quite horrible, so I think I'm gonna use the technicals more as a guidepost versus what people say, because the data's data, and the data could be manipulated, but price doesn't lie. So that was a lesson there with oil. And then as well as but this fact that I'm talking short-term oil, I thought it was going to move a little more quickly this year, but apparently it's so political with the Strategic Petroleum Reserve, etc., that they can manipulate oil quite easily, the price, at least today. And this is the import-export data. It's weak. In that area, there were 650 million people. So China is going to be running short on people in the sense that they had the one baby policy for quite some time. I believe it started in the late 70s. And there was at least 20-something years, maybe 30. And so by 2060 approximately, they're just, their population is just dropping way down. And in order to really have a thriving economy, you got to have young people to push things through, and they just have that gap. And so it's going to stress their economy. And so I think it's going to be likely that they're going to want to harvest the people from Indonesia and those areas in some form, and they're kind of indirectly doing it now, meaning the unemployment in Vietnam last time I looked, it was 2%, so they're going to maybe take this passive approach where those people are going to support their economy, the 650, but in 15 years will they want that region? I would say yes, they would want that region completely. So they need population, and so they're going to go for the low-hanging fruit first, and so that will drive potentially more war. But that's out probably 15 years. It's my guess. So Middle East tensions, that's not in focus. I haven't heard anything. I haven't been, I've been following the banking industry in that. But it's been the same. Israel's been utilizing Azerbaijan and using it as a nice point to take care of Iran, because they are a non-classified terrorist country. China tension. Same thing, not in focus. I did notice the money supply, M2, was up almost 13% year over year. So that's, the crash of 1929, they cut money supply. I believe it was by a third, but they cut it dramatically, and that's really what led to that crash in 1929. Not having there wasn't enough money, and somehow you got to get in the economy, and so this is a good sign that things might pick up for them, but it doesn't mean it's generating good growth. They have the cities you hear about that are ghost cities and stuff like that. So they built them and spent money, had jobs, but the actual thing they built was just art, because the cities or the buildings weren't safe, or that's likely the case. But saying that, it's better than having people rise up and fight you. I think that's quite creative of the Chinese. I give them credit for that. Actually, it's ingenious. I mean, if you need people working versus, just sitting home and, sending socialist type checks, it's not very wise and healthy even for them. So they feel like they have a purpose. And they probably slightly gained a skill set too, because in the process they've made a lot of mistakes and probably realized they were building the building wrong, etc., etc. CPI core rate, I mentioned that's edged up higher. So we have inflation, we have the banks crashing, we have oil a little bit under pressure, we have a lot of tension in the Middle East, and yeah, just that whole region has a lot of tension. I put this in here really. This is before the banks all like blew up or went into just the regional banks specifically. So the banking started with Silvergate Bank, and Silvergate actually has payment rails. This is what I was told, throughout the United States. And so essentially, like, if Silvergate went down, they couldn't utilize the payment rails to pay employees across the United States. So the bank did more than one thing. Its parent company, SVB, is the one that they're huge. If you Google them, and you'll be shocked in seeing all the entities. It's very similar to FTX. Entities all over. They have a lot of exposure to China as well. Quite a few banks there, and the CEO of General Atlantic, one of their investors, he has strong CCP ties, being on the board of, and that's why TikTok and eHarmony is involved too, because eHarmony, and that's affiliated with a German company as well as with General Atlantic, but eHarmony is, they could harvest the data, whatever the right word is, and utilize it to blackmail people. That's probably what they were doing. And given that there's so many connections with China and dealing with all these banks and how they're all located all over, like FTX, it makes me think it was a money laundering scheme. Yeah, and then they don't hedge. It just makes sense. It's just, and then you read the link, the bio on somebody on their LinkedIn, and it's just like, okay, it's like, it was ridiculous getting all into that whole wokeism stuff. So there's no professionalism there as well. So there's a lot of red flags, just like FTX. There was like a lot of red flags there too. And so the Federal Reserve here says inflation is caused when the money supply in an economy grows at a faster rate than the economy's ability to produce a good or service. So that's how inflation is. That's what inflation is caused by, money supply. And so you see money supply dropping off here in South Korea. You can see inflation dropping off as well. Money supply. So the thing is, the Federal Reserve could use money supply as a tool to bring down inflation rather than interest rates. Because with interest rates, when you raise rates, you're essentially passing on wealth from a debtor to a creditor, because debtors have to pay the bills, and they have interest rates attached to that, and the person on the other side of trade is the creditor, and so they benefit. And that's by raising interest rates. Now, if they mess with money supply, it would actually cause rates to go up, but it would be more in a normal fashion of just the general economy, and it wouldn't favor the wealthy or those that own businesses, which tend to be wealthy people. It wouldn't favor the upper 50%. So if they just focus on money supply, the upper 50% would be more impacted. If they focused on interest rates, it's the lower 50. So that's the difference. And I just came to that conclusion using logic and reading about it. I think, at University of Chicago, they talk about that. South Korea, so then you can see the inflation dropped off, and then they did raise rates as well, slowly and steady. But raising rates is really just a separate tool, and it does work, but it's more geared at hurting the lower class of society, like I said. So any government doing this, if you're in Colombia or something, don't raise rates. adjust your money supply. All right, so here we have an overnight reverse purchase repo, the RRP. Overnight reverse repurchase agreement. So typically this window is used by the commercial banks, and when they have extra cash or extra assets, they could park it at the Federal Reserve and earn a interest rate of like 4%. And so it shot up to well over 2 trillion, and it's been trending down. The question I have on this is, what I read into, I can never find the details, but can you get a pet rock and put it in here and get cash for it? And my guess is where that yellow line is, that's when they started giving their pet rocks to the Federal Reserve because they didn't have enough cash. Yeah, it's pretty wild. And so the Federal Reserve has a lot of mortgage-backed securities as well as commercial-backed securities. And I'm presuming, this is a theory, this may not only be like a different type of security because I couldn't really find out when I read it. So anyhow, so basically the banks have been selling their assets for a while, and Wells Fargo has exposure. That's why they opened, I think, with a $12 billion, their access to having $12 billion through a shelf offering. And so Wells they're potentially like Huntington Bank. I expect them to go bankrupt for sure. Well, I don't know. They changed. I'm not sure what they actually did, meaning Biden and them. But in the current state, like if anyone tried to take their assets from Wells and or Huntington, we would have. Huntington would be gone. And there's a few others. There's like 15. And there's companies like Ally, the auto company. They do subprime auto lending. I think that's like an opportunity there. Like if you short stocks, that would be an excellent choice. So there's opportunities out there still. You just don't want to do it when the market. If you're gonna ever short a stock or buy puts, or if you're gonna buy calls, you don't do it like on the day it's shooting up, unless you know it's gonna definitely shoot up. But rarely anyone has that type of intelligence or information. So if you're Bitcoin, like I have Bitfarms, I actually have over calls on that, and I've bought them I'm usually buying them when the stock's down 15% or 10%. I'll buy calls because that's how you get good deals. And then I'm gonna hang on to them for like 2 years. And so with Bitcoin, let's talk wages real quickly. So this is just showing that wage inflation is tapering off, which is a good thing. I mean, it's actually, if you look at the angle of that, the drop, that's actually quite steep. So you see this wiggle here from 2018-ish to 21. It was almost horizontal, the slope. And say in this situation, there's a much steeper slope. And so that is implying that wage growth is dropping off extremely fast. So we get the banks blowing up in distress, and then we get the wages here, and then we have China starting to slow down. I'm starting to wonder. I don't know if we're going to really have this heavy inflation. It just doesn't make sense at this point. The only thing that would really drive it, which has been what I thought from the beginning, is war. And because we have, I guess, a shortage of a lot, like aircraft carriers and such, or I don't know, we have a shortage. We're just not producing many. So that's a problem, as well as submarines and such. Yeah, so we definitely need to beef up our military. And because of, anyhow, getting off topic, but the point there is that war typically leads to inflation. And given everything going on, nothing has been de-escalating in Ukraine. It's actually been escalating. And then now it's even escalating more. We got countries teaming up, just like in World War II. So the smart thing would be to let Russia have half the country or whatever, and then if they step an inch over that line, then boom, they get hit hard. That would be the smart thing. Give them that piece of the pie, and then just, as long as you plan ahead internally with every country now, like tomorrow, say if Russia goes 1 foot into Poland, 1 foot into whatever country, we come in full force, all of our F-35s from all the countries in there. Saudi Arabia and France would lead the way with the Italians on the tail, like zipping along, flying. And they would just flatten them, take out the Russians real quickly. That would be the smart thing. End the war tomorrow. That would shift the power to the United States. It would be a short-term loss for the U.S., but it would be a long-term victory, because then it would contain Russia. Now, if this would have to be something that it could go through multiple administrations, though, so that in like 8 years that happens, but the United States would actually have to execute on it too in that situation. So that would be important. I don't know how you could secure that. And so that would make the deal fall through in that sense. And then you would want to keep escalating with Russia. You'd have no choice because he has the edge right now. But the way we could win is end of war today. Then it weakens China. It weakens the whole region because they're all becoming best buds right now because of this war. We need to end it now. And I'm here with my UCF hat. So Biden and them know that. So the fact is, if they're not doing what I'm saying, they want to give more power to the CCP. You gotta always just look at actions. And Biden, if you look at his history, I never thought I would be talking about him. If you look at his history, he teams up quite a bit with the CCP, and he's met with Xi like 50 times. And I always thought that was like, whatever. But when you go by actions, it's like he's actually doing everything in his power to strengthen China. Yeah, and so at the same time, you got the United States, and we're in our region. We're doing some stuff, but I don't see much of anything unless it's like all under the radar, where we're going to Brazil, and in the countries in our, I know we're working really well with the United Arab Emirates, like strongly across Malta. That's like our second America, apparently. I think I should keep my mouth shut. I don't know. I'm just making this stuff up, but it looks like they're going to make UAE USA 2. At least from what I'm like right now, I just seen all this stuff going on. So it's like they're making it something special, though. That's for darn sure. It's well planned. So let me know, and I'd like to know what's going on in the UAE. And that's Dubai is in UAE along the water, and it's like in that shape. Yeah, should be interesting. I left this in here because it was at 2.6 trillion, and now it's probably it's probably, I don't know, 2.8 my guess, and then overall it's almost 5 trillion. So the lower 50% are building up their bills, meaning increasing their credit. Either they're doing it because they want to save their cash or because they don't have enough cash. And they probably don't, because if you drive around some of these towns outside of where I lived, it's just shocking. Like, people can't fix their cars. They're like, belts are squealing. And like, the car looks there. It's pretty sad. And this is America with like so much money. It's sickening. Let's go to the next one. Baker Hughes. December 25th, we're at 622, and it continued. I couldn't believe this. It dropped from 592 to 590. I never would have guessed, and it just seems very unlikely. You keep going, it's gonna like go to zero, and then we're just not gonna have any oil in the U.S. That would be great for the oil companies. No, well, to a certain point. But also, it shifts power, though, as well to those countries with oil. I mean, if if you look at the actions of the United States, we're like almost like it's like a a blank, like a checkbook. We're like a checkbook with a whole bunch of blank checks, and you could probably get away with ripping a few people off with it, but eventually you're gonna run out of checks or you're gonna get caught. That is like how I feel like the USA is right now. Like, we're using a checkbook, there's no money in the account, and we are, we're robbing people essentially. And next is sentiment. I don't really understand these, so I'm going to do more research, but what the key here I'm just looking at as I learn is just, are we at an extreme? And we are not. And this is what I've showed prior, looking at the spread on the spread between the US BBB rated corporate bond yield and the 90-day treasury. And this is a little dated, but it's actually probably below the line now. We're close to it. So we're at, well, you can't say, I was going to say we're at a point where we're about to turn, but you don't know. But it feels like I'm going to say this is about to turn. We're at that exactly turning point. We'll see, probably before June. If we don't get a crash in like the next 10 days, I'm gonna say that would be like June when we like finally wash out. Like, then this flips up, then the market really pushes down for another like 18 months or so. That's all on the yeah. That would actually, I don't know. Just from a standpoint that I feel like the economy is way, way, way stronger than I initially thought it would be at this point. So there is a potential, if we don't have inflation, and the only way this is going to turn, it means that inflation started dropping off. So the only way that if this turn had started dropping off now, because our economy is so strong, we'd have a correction in the stock market, but it wouldn't be that bad. And then we would be ripping. It would be great. And just given the situation with China, all the countries, inflation is dropping now, and that is I would say I would lean 50-50 on that today. Like, we could fall either way, but I'm almost leaning more towards our economy ripping. But the thing I don't really know is how much of this China adjustment down, because it's probably not going to be growing at 6% nor 5.5, and I don't even think 5, maybe 4.8 or something like that. And because of that lack of growth, how much is that? I think we don't do, like, it's not that much for the United States from a standpoint of how they use us. So it's probably not too bad. So even that, yeah. So anyhow, I think it's important to distinguish between a stock market crashing from a technical reason, like with the banks currently, the stock market crashing because of a more economic reason. But that's usually more prolonged and slow, more of a bear market. And so we're in a situation where basically what I'm saying is that the market we're not going to go into extended bear market. We're just going to slowly turn up. And the reason why I'm saying that is because our economy is so strong. We're at a point where inflation is dropping off in many areas. And the only thing that is going to kick us again into that inflationary spiral will be China really growing a lot faster than expected. And currently it looks like it's actually growing less than I expected when I built out this whole model. And then the next thing is war. So I don't know war well, but from a standpoint of what I've seen is that inflation kicks up during war. You're going to need a lot more commodities. And that's part of my whole thesis when I built my list in the beginning. Well, I didn't have a lot of steel in, but if any. But steel, it's common sense. If I'm saying, hey, the shippers, which is dry bulk, so it's not steel, but the point is, I guess it is steel too, dry bulk. So the point is, like, if I'm saying I think the ocean shipper is going to do well, that means I think that steel is going to do extremely well, and that means China's going to do as well. So all commodities will do well if the ocean shippers are doing well. That's implied in my list. But I do also talk about commodities too. So the yield curve, this is a 10-year note minus the 2-year. And you can see it's inverted. So in a normal economy, the 10-year would be, say, at 5%. The 2-year, you would get at 2% back. In this situation, it's flipped. And that's when money's just in equilibrium. Society's struggling to understand that as a whole. And this is the list. So my net exposure now is 27%. So when you add up everything I'm long, net out to short, I'm only 27% net long. So that means the market goes down 80% tomorrow, I'll be, actually I'd do quite well. I do extremely well. So I'm positioned myself net exposure at 27%, so I don't expect the market to go up. But I do still own long dated calls and certain things. So if the economy does turn around, because I do expect it to turn around, I would do it well on that. So that's why the markets are complicated if you want to get consistently good returns. And so I'm trying to figure that out. And at the same time, I'm like screwing up on other things. I could be totally right, but I'm too busy with work and I missed the trade or whatever. And then I'm like wanting to chase. The worst thing you do is, one is don't do anything the first, say 3 to 4 hours of the trading day. I've found I am way more successful when I just look at the market the first time at 1 p.m. I might have seen price, real quickly, like in the morning. I see the futures and stuff, and then see it at 10 o'clock or whatever. But I'm not like really digging in. And so, say I wanted to evaluate everything at 1 o'clock and spend 15 minutes, go and just check it all out, check out the price of commodities, the currencies, where everything's flowing, look at interest rates, short end, long end of the curve, all the key things. Then I guess you could be looking at some of the spreads too, and I'm learning about some new tricks you could do with a spreads and stuff like that, combine them with other things, then put a lag on them, and then it has a high correlation with the next move in the market's going to do. So there's some cool and interesting things you could do. So so the important thing though, and this is what I'm saying, is don't trade or buy or sell in the first 4 hours, or not 4 hours or so, but at least until 1 o'clock ideally. And you'll find your performance will improve. And when I say trade, I'm talking you buy it today and you might hold it for 4 months, because I don't know, I tend to be more impulsive as soon as the market opens and the price is shooting up, and then they're on the news, and it's just but if you go at 1 o'clock, the market's already opened up, it did all its things, now it's finally chilling out. It's okay, I'm here. Then you could tell looking at price, if you know how to read the tape. You look at all the different prices, all the stocks, all at 1 o'clock, immediately you know what the market is doing. You could see it's calm, but then from all the price action, from all the natural gas to this to that, you could just you could get this feel. And that's why you could read the tape and know when something's going to happen. You're uh-oh. And then 2 hours later or a day or two later, something serious happens and is announced. And then, the tape, it's quite interesting. And when I say the tape, that means reading the price of stocks or commodities or anything. As someone buys, someone's buying, and it creates this energy field, I guess you could call it. Maintain buying power. So the 3-month T-bill is currently at 4.8. It was at about 5% last week. So this thing's popping around like a stock. which would imply, we're in a situation where you would not want to be buying equities if you plan on needing cash in like the next 6 months. Maintain buying power, obviously cash today. I would say cash, that's it. Yep. And there's a stable coin Circle that was like, or was it Circle? The company, the parent company Circle that owns it. There's a stable coin that was crashing this weekend and went down to I believe it had 85 cents on the dollar. So they had basically a bank crash, a run on the bank, and because they had a portion of their assets with Silicon Valley Bank. And BlockFi, they were or are a crypto lending firm. Plus, that was their main focus. And they had over $200 million with Silicon Valley Bank. So they lose everybody's money because the FTX guy scams them. Then they have their money over on the west coast of Florida, $200 million, and then that gets like washed up because a bunch of scammers, they're pushing money through General Atlantic to the Chinese. It's crazy. It's just mind-boggling. Gold and silver. Yeah, silver was up a lot. There was a bid call on silver. And yeah, gold and silver go long for sure. Bitcoin. Now Bitcoin is, my conclusion on Bitcoin is that there's two things about Bitcoin. This is after studying it for 5 years. The two things are, one, Bitcoin is a tool that is being used by the CCP, meaning I say that and everybody's, the point is, if you're objective in, my back. If you're objective and you think about where all the ASICs created for the Bitcoin network. As far as I know, they're mostly all created in China. The ASICs are like what supports the network. And I know it's just like a car engine or whatever you want to call it. It's in theory like a personal computer, a server, fans, air, calculations. That's about it from my perspective. So, sorry. You're going to have to watch me on 2x the speed. I'll talk extra slow just for you folks. That's really fit for everybody else. So, Bitcoin. So if the Chinese have all the ASICs, they're creating them. So they have the raw material for like the network. They could, who the hell knows? Everybody would say, no, they're not going to like hack it or do anything funny. That's one. Then if you remember in the beginning, all the miners for Bitcoin were in China, like all of them. Like I think it was like 80, 60, I think it was like in the high 70s. I think it might have hit 80 at one point, I don't know. But I know it's definitely in like the 60s or so, 60s to 70%. So 60 to 70% of the Bitcoin network was in China. Does that seem suspicious? Do you think the Chinese is Satoshi Nakamoto? You know what I'm saying? So if you just like are objective, it's quite obvious. Bitcoin originates out of China, probably by the CCP. All the miners were there. I mean, it adds up. All the miners were there in the beginning, and all the ASICs that are built were built there. Whoa, do you think it's from somebody from Hawaii that did it? I don't think, Hawaii, no. So if it's not a CCP thing, it may not, and the free markets just ended up having it go that route, then Bitcoin's going to go to well over $1 million in this decade, or at least around 2030 or so. And it might be sooner, just given how currencies are looking today. And then once they have digital currencies, our region's going to have one, right? And then the Asians will have maybe multiple, and they might eventually have a parent one. It's just going to be all these Bitcoins zipping around. And then there's going to be the Bitcoin. and you're gonna have countries like Argentina. They're still gonna have inflation. They're gonna still have the same problems. The only thing it's gonna be digital. So you're gonna have all these people in Argentina shoving all their money into Bitcoin, and this will not change. Any inflationary country now, today, in 20 years, that's where all the other citizens, unless you're extremely rich and you own everything, it doesn't matter, I suppose. But everybody else, they're just going to put all their assets to Bitcoin. So Bitcoin's going to be... Now, the only way that would be wrong is if the U.S. government opened our currency to other countries and such that the citizen could go to the ATM, stick in their bolivar, and out pops a digital U.S. dollar. Now, if the U.S. did that, that would eliminate Bitcoin's... Well, then that presumes U.S. is honest. I can't believe I just said that. So the U.S. that's presuming they're honest and not going to mess with the currency. You're going to have like some president. Oh my God. So no, Bitcoin I think is going to, so Bitcoin's definitely going to hit 5 million or probably, well actually it's going to go up forever. So it'll hit 1 million and by 2032 or so. And then from that point on, it's going to be volatile probably the first several years. Yeah, for sure. 7 years. So 2037 to 38 or 39. Then around at that point, it'll start to tail off. And the volatility will likely drop way down, as it's just mainly used by the central banks and it's less market based. And yeah, it's just more of that. It becomes the Dow. It started off. So Bitcoin right now is like the Russell 2000, or even worse than that. And so Bitcoin's just all over the place, getting drunk, doing whatever Bitcoin does, going out of business, going bankrupt. And then eventually Bitcoin's going to upgrade, and it'll upgrade to a better index. We could say the S&P 500. And then Bitcoin's still pretty volatile. It's a lot of tech stocks, and then boom, it grows up at 20, that later date. And the inflation will just drop right down. And that's what's going to happen with Bitcoin, the cycle, and that's why. So we're going to see Bitcoin well above 1 million, unless it is the Chinese CCP type Intel op thingy, which I don't know. And so Jason Lowery, who is with Space Force, he should know that. So he should communicate to the community and say, hey, the ASICs are all in China. What are we going to do to fix that? Is that part of the CHIPS Act? If it is, then we know Bitcoin will be the one. So it would be worth knowing like what is in the CHIPS Act, and do they talk about cryptocurrency at all? Because if they do, if they mention crypto, when I say crypto, I mean Bitcoin, because it might say the word crypto, not Bitcoins, because Ethereum and all the rest are junk. They're like trash, because they're basically, when Ethereum was proof of work, it was legit, it was good. They destroyed it because the way proof of work works, you actually have to use energy to generate that token. So the inherent value of the token is driven from the energy. So you can't have a token if you don't have that energy. So if your neighbor can't afford that bill and has a machine like you, he could generate that token, and it creates value of that token because it makes it scarce. That's proof of work. And so Ethereum was that, and they switched to proof of stake, and I'm not going to get into that, what it is specifically, but basically it's a scam. So now they went from this beautiful thing to a scam. I suppose they might be able to go back, but the point here being is Bitcoin's the only proof of work that has the record it has. It existed for that long, doing so well. So we'll see. Time will tell. It's unfortunate I can't trust it. So coal. So coal's been this company specifically has good contracts. And I'll look into like the average contract length, because that would be important, because the economy like slows down. yeah, my story is like a little twisted because I was so fixated on the U.S. slowing down that I didn't. And this company here does a lot of Asian deliveries and such. Yeah, I think it'll be okay. At least as of today. You gotta always be able to pivot in your decisions. And then we get to Southeast Asia energy. That's energy is oil, natural gas, and this type of stuff is like I'm talking 5 years. Metals and mining, same thing, 5 years. All this is 5 to 10 to 15, going to do extremely well. Eagle Bulk, because as society is changing, technology is changing. As technology is changing, new equipment is required. So if everything always stayed the same, then we wouldn't need any upgrades, and we wouldn't need this metals and mining. And before it's like the Jetsons, right? Except better. Instead you're like cloaking through walls or whatever, and so that's really driving mainly the minerals and mining, and that's why there's a demand for that. So that is like probably gonna be one of the best sectors in the U.S. for the next like 10 to 15 years. I would say. I know that's a pretty bold call, but I'm calling it at the top. Metals and mining for about 10 to 15 years, and then I don't know. It should be interesting. Eagle Bulk Shipping, Golden Ocean. So the shippers are doing quite well even through this. This is another reason I added the shippers to the portfolio in December, or whenever it was December mid, because I expected to have a lot of craziness and volatility. And I think I said to buy Bitcoin and I think Q2, and so we're getting there. And so, yeah, it's playing out quite as it should. Except I didn't expect the U.S. to be so strong. That's the only thing, which is not a bad thing, because you want, all this stuff is going to happen regardless. It just means the other stocks in the economy will do well, which will drive everything else. So it's a win-win. So being wrong in that situation, it's not going to cost you. I mean, it depends on your style in general, but in this case, this is a non-beta driven investment style. The miners, yes, own these. Paramount, own it. HCC as well. Bitcoin, definitely. Puts, definitely. You want to have some puts. I have one on the S&P 500 high beta names, and I have Tesla, and I also have Brookfield, I think it is the name. Brookfield, yeah. And I have a few others. So I'm a little, I'm not over my skis, but what's really the Tesla? Like Tesla was up only a couple of dollars, and those puts like swung like, I think it was 20%. You gotta have. I have a put that's at 1 penny. It has no bid, so there's no like price. But if you go to try to buy it, you're gonna pay like probably 25 cents or $25 for one contract. So it has no price on there, but it's really, try to buy it. So if I tried selling that, I know I could probably get 25 cents for it, but the market maker would be on the other side of the trade in that situation. I guess if the volume was like huge, he would only execute maybe a certain percentage of it. I don't know, but I'm not like doing huge dollars by any means with these little options. But it could mean something too. I mean, especially if you go to the wrong part of town and you see what they're driving, and like the amount of money you could do on one of these trades is like, for them, it would be life changing, or they'd buy drugs. I don't know. And that's Gran Terra. We'll see what's happening in Colombia. So that's why I'm watching the Colombian government so closely with Petro, because of Gran Terra. And it's a beautiful country. I've always found Colombia to be interesting. It just has this vibe and a good energy about it. And next is on dollar weakness, Central and South America. I don't know, like that one's probably not the best trade, but you got Petrobras in Brazil, one of the largest economies in the world, which I wasn't aware of till recently. And that company trades at a P of, I think it's like, I don't know, it's 5 or 7, something like that, under 10 for sure. Generates a massive amount of cash. It's like, unless the government's going to like socialize it, take it over, why would you not buy that stock? Then you got to play on the currency though. So if the U.S. dollar strengthens tons, that would hurt that stock. Yeah, so their stock would go way down if our dollar went way up. And so in that situation, that's why you play in like stocks in certain countries. It's if you're going to hold it for like a period of 2 years, and that's my style. I like to think I'm going to hold it at least for 2 years, and then like think out what I want to hold it in 15 years. And then if you're like, oh man, definitely in 15, you're like, okay, I'm going to do that. I'm gonna buy it. But if you're like, oh no way, but then you were just thinking about I'm gonna hold it for I'm gonna hold it for 2 years, and you're all gun ho about it, and then you can't do 15. What's wrong with you? And then it's a good self check. You got to try it. You'll surprise yourself on the reaction you'll have. Excuse me, my try. Amgen. Yeah, these three here are just based upon straight up fundamentals. Good fundamentals. Good brands too, but it's on the watch list. So what would happen, like for me to like these stocks, I'd have to see their technicals on a monthly chart start to turn up, flatten out, turn up, and just look clean. And that would be my first check, and that would say, okay, I'm willing to consider this. But if they say they ran up 20-30%, I wouldn't touch them, not at all. It would have to be a big picture, like technical indicator, which means there's a lot of interest, and that's what price always tells when you're consistently up. That means you're consistently driving a lot of value to the market, and that is felt in price because people are aware of it, and otherwise the price wouldn't go up. It's a connection of all energy and information essentially on a stock. HOOKIPA, yeah, that's a pharma one. And so anytime you see a low price pharma, you could do really well if you start to get to know the company and what they do, and you fill it out. It's like having a dog, and at first you don't know your dog, then you'll start to know your dog's habits and where it hides stuff and where it does bad things, and when it wants to wake you up at 4 a.m. That's like it'll be like HOOKIPA here. And eventually you understand it well, and you could trade it. It'll go up and down, you could print money. And so to do that though, and I've never done that, I've thought a lot about it, and I think I'm going to, you got to find a stock that matches your personality. So you actually have to have a connection with it. Like if you don't like the name, Dry Bulk, you're not going to have a connection. It's not just about price. That's what people like don't really understand is like, I always say follow your gut. The reason why you follow your gut is because you just feel you're flowing with it. There's no resistance. And that's at a subconscious level, and your heart too, because your heart has sensory neurites, and these are essentially little antennas, and they could communicate with the brain. And yeah, and so we're very electronic beings. Our heart has electricity in it when it beats, so it kind of gives it away. Like we're very energy based, mostly water too, right? We're like walking antennas. So if you could utilize that energy, whether via meditation, having faith, praying, I say we are tech beings, and that's why we're mostly water with some electricity. We're tech beings meant to travel because our cells could probably break up, since we're mostly water, then come back together pretty easily. Yeah, it makes complete sense. We're like Yeah, that's pretty wild. So Zim was up like 10% with the banks are all crashing, and Zim was up like 12%. I wonder why. Maybe Zim was involved in that. They're Israeli based shipper, but also is on the technology side too. It just didn't make sense. But they also reported earnings and did well, so that was really the real catalyst. Hedge. We have Brazil, Tesla puts, BN July 2024, 24 puts, Qualcomm. It doesn't look like I quite finished my list, but I named them earlier. And I could yell them out real quickly. So we have Tesla puts, SPHB, Sam, Frank, Harry, and Bob. GOGL, KRE. That's the regional bank ETF puts on that. Bitfarms of calls. Vermilion call, Marathon, Hive, Zim, Riot, GTE. That's my Colombian friend. Bitfarms, Vermilion. I don't know, but I should have probably did Vermilion. We'll see. Oh, this is a good one. Like this is one was like I was torn on, but just because the fundamentals, I went against the grain a little bit. But Bill, BILL, that it's just when you get in these tech companies, sometimes it doesn't matter how crappy they are, the price could go up forever. So you got to make sure the technicals are lined up with the fundamentals, and then you'll do okay. Looks like I have a little Carvana put too, not much. But most of these are very small positions, but it adds up when it's quite a few positions across the board. And I have some other stuff, equity as well. So that's it. So I wanted to share my list on. I should have given a little overview on, I guess, the banks and everything. So and how to look at it. So with the banks now, certain banks are going to their stocks are going to go to zero, I would think, or they're basically going to be socialized in a form, and if it's not zero, it's going to go to like $1 and just sit there forever. Like if you look at Citigroup, if it's a reverse stocks, there was a reverse on Citigroup in 2008, so the stock is actually trading at $4 and something per share. So Citigroup's been nationalized based upon price. It's not moving, so that's likely going to happen with the banks, the regional banks, and there's consolidation of the banks. I heard that was part of some plan I heard where the banks were going to be consolidated, so there's just like one central bank and a child bank like JP Morgan. But it looks like here in the U.S. we're going to settle on 4 banks: the Wells Fargo, JP Morgan. Who are the 4? Bank of America and one other. And that's the way it's looking. And then credit unions, but I don't think there's going to be other banks. There are not many new ones coming out because people won't trust them. Because you're going to go with some little bank you never heard of, or you're going to go with JP Morgan. It's kind of a no-brainer, especially if you put a lot of money in it. So I wouldn't want to hold the banks for a period of 10 years. No way. So why would you buy them today for like hoping it goes up 30%? There's just better places you could, like most of this list, you could find, like maybe not Eagle Bulk, but you could look at Eagle Bulk, that specific sector, and list them all and find one that's a little bit better, because I haven't flipped these out. But the point is, like, you could do much better with some of these versus, yeah. And that is it. Oh, Discover. And then there's Bank of America. Oh, and I have a special sit. What do I have on here? Special sit news. Yeah, so that is. They run a firm that does a lot of different types of work, like analysis and research, just from what I could tell. And they put out special reports every so often. And he was basically talking about how the industry was falling apart, and for us to be ready, because it's sooner. There's Bank of America is going to be a great buy. Who's saying, he didn't say those exact words, but he was talking about different things a while ago before everything blew up. That's the way I read into it. Like, hey, things are going to get bad, and that would provide a really good opportunity to buy some companies like Bank of America. But we're not there yet, in my honest opinion. So with the banks, I would not go shopping around unless they go down. Like, say you have a good bank and it actually goes down to like only $1 or $2, or if it goes like compared to its all-time high and it goes down, like, yeah, I would only touch them if it went the low under $10 or something like that for the bank for the buck. Otherwise, it's just like the bank's gonna likely get stuck at a certain price and not move. So that's my take on the banks. It's just a trade. And then outside of that, I would be very cautious. You could buy like Carvana and companies like that. They're gonna really struggle. Companies with a lot of debt related to subprime won't do too well. So that is who I would be looking for. And I think that's it here. Well, thank you for your time. And if you like the content, subscribe. And this was very long, and I appreciate you sticking around. Take care.